CNBC TV18 presents Crypto Corner, powered by CoinDCX.
As promised, let's shift focus now to crypto space, and Ola Dudin, who is the co-founder and CEO at BitOasis, now joins us live on the show. Ola, hi, thank you so much for joining in. And you have a lot to your credit, really, on the kind of work that you've done on Web3 and blockchain. But I want to start with what's happening with Dubai right now, and you really seem to be expanding about, around, and far from Dubai.
Thanks, Manisha, for having me on the show. I'm very glad to be with you this morning. Definitely, we're seeing a lot of regulatory and adoption momentum in our markets. I wouldn't say just Dubai, but we're definitely seeing that across the Gulf overall. Obviously, UAE tends to be on the forefront, and they're definitely leading the wave of adoption. So we've seen several factors, I think, contributing to that. Regulatory clarity, positioning UAE as a hub, new use cases in terms of adoption of crypto, such as stablecoins and tokenization of real-world assets, most recently real estate that we've seen in the UAE. And I think also global regulatory developments, particularly in the US, such as the Genius Act, has been fueling more interest and adoption across the region.
Oh, well, absolutely. Ola, I want to take it ahead when it comes to the real-world asset classes, especially when it comes to real estate as an area. That really seems to be picking up. I mean, we have seen those instances in India as well, where you have real estate now being launched on blockchain as a technology. But as you said, Middle East and UAE, Dubai seems to be really spearheading that. Where would you see the future, let's say, in 5, 7, perhaps 10 years from now?
We're definitely seeing tokenization taking momentum. And I think us as a crypto platform that is regulated with different licenses across the Gulf will definitely see not just crypto assets being traded, but tokenization of money, such as stable coins, and tokenization of physical assets and digital assets as well that will be traded, exchanged, and then ultimately transacted over a blockchain. So we're definitely seeing that in terms of real estate, but we'll see that in terms of equities, bonds, physical assets such as gold. And we're definitely seeing some of that traction in other markets, and definitely Middle East, started with real estate, but we'll definitely see that in terms of other assets as well. So we're seeing that convergence, I would say, of the crypto world and the traditional finance world all coming into blockchain and ultimately being traded on platforms such as us, as ours, in terms of BitOasis, that will ultimately spearhead that adoption and distribution and liquidity, I would say, that being transacted and traded in those markets.
Ola, when you look at the overall markets, well, yes, we've seen a lot of push and a lot of enthusiasm as well in the last many years. But the last couple of years, would you say, is more about corporates, countries, institutions, family houses wanting their piece of pie as well when it comes to the technology or even the crypto prices for that matter?
Yeah, I think the Middle East market is following also similar trends to other international markets. So I think in the last couple of years, what we've seen is higher interest amongst the institutional base, or let's say family offices, funds, corporates, et cetera, either in terms of Bitcoin treasuries or diversifying their assets, or ultimately, essentially coming into the market by way of buying the asset itself or exposure through ETFs. So I think Bitcoin ETFs has definitely, in the US market, has unleashed that wave of institutional interest in the crypto space. So particularly in the Middle East, we've definitely seen a high interest from high net worth individuals, family offices, and ultimately even sovereign wealth funds. So, recent surveys and statistics says that over 90% of high net worth individuals and family offices have actually developed an interest in crypto and see it as a way of diversifying their portfolio. I think in the last year, recent filing has shown that Mubadala has increased its stake in BlackRock's Bitcoin ETFs. And then ultimately, the Central Bank of Saudi has invested a small portion in MicroStrategy as a way of being exposed to Bitcoin. So I think we're definitely seeing early signs of serious institutional adoption in terms of sovereign wealth funds and funds overall. But I would say high net worth individuals and family offices have already built exposure into the asset class that we would actually forecast and predict that will continue growing as the asset class becoming more of a legitimate asset class in the sense has a place in the investor portfolio, but also with regulation being in place, I think that increased the trust from qualified and institutional investors to actually directly invest into the asset.
Well, absolutely. Well, I was reading a report in US, especially if you're not holding or invested in some part in sense of crypto or blockchain, then you are seen as an outdated business. Well, that perhaps is what we are looking at coming now. But my final question to you is about from here on, what is that BitOasis is looking at as a company, let's say 5 years down the line? And second, you spoke about regulatory. When it comes to crypto or blockchain as an asset class, how much regulation is too much regulation or right regulation? How would you read that?
Yeah, so in terms of our aspirations as BitOasis, so we've been the first and we want to continue being the largest platform in the region. And we say the Middle East, it's across the region and not just in the Gulf. As obviously regulatory clarity continues to develop across the region. We're seeing most of that in the Gulf, where we've got 2 licenses in the UAE and Bahrain. But we want to continue being at the forefront of adopting crypto and allowing retail and institutional clients to invest into the asset, but also be the gateway to Web3. So we definitely see ourselves as a major player in essentially driving the wave of adoption of crypto assets, be it in terms of Bitcoin and ETH and other the crypto assets that we see in the space, stable coins and other tokenized assets that we will see developing over the next few years. So we definitely want to be the gateway that is allowing that adoption of crypto assets across the region to hundreds of thousands and millions and tens of millions of customers across the Middle East. So that requires robust regulatory frameworks. And to your second question, regulation is very important to allow players like us that are serious about building that infrastructure, Web3 infrastructure in our markets, to really flourish and be able to drive that adoption safely in a regulated way, but also focused on consumer and customer experience and allowing seamless adoption and integration of this technology in our daily lives. So we're always advocating for friendly regulation that allows innovation, but at the same time, we really prioritize consumer protection.
That point is well taken, Ola. Very, very appreciate you. Thank you for joining in and making sense of what really is happening, especially in the Gulf area and, of course, overall the world. And as your point is well taken, that regulatory-friendly regulations is what perhaps this developing technology needs at this point in time. But with that, that's a break on this segment. We'll come back with more news and stock specifics on the other side.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.